Whenever you find yourself on the side of the majority, it's time to pause and reflect. Mark Twain. What we do here is not pay attention to the majority. In fact, we discourage you from getting yourself confused with the financial news media who's out there to sell you commercials. They're there to sell you products, to sow confusion, dissent, anything else that they can do. One day they'll say one thing, the next day they say the next. My friends, the only thing that matters is what you see on the screen right now. For everyone listening to our podcast, we're looking at price movement. We're looking at our charts. That's all that matters. Price movement shows you what is going on, what the investor psychology is, where the market's going. We're the big wave, and our biggest wave is the weekly vertical crossover. And you can see time and time again this year, so far, everyone has worked. And we are waiting to see how gold's going to shake out. We'll talk about that a little bit. But the big wave, the entire sentiment of the market is always reflected in price movement. That's all that matters. People can talk around it all they want. They can try to confuse you. You can try to figure out why the market is doing what it's doing, but why don't you just focus on price movement? That's what we do. Now, we see stocks and gold up a little bit. Stocks up nicely, bonds back to going down as they were supposed to. Again, we'll continue to watch. We'll talk about all of this. And over the weekend, I'm going to be preparing to launch for you on Sunday information about the Virtual Personal Wealth Fund. It's really the whole reason we do the Accelerated Market Mastery training, to get you to the point that you know how to design and put together for you to start practice trading your own virtual personal wealth fund. It's like a little mini hedge fund just for you, personalized just for you. We'll talk more about that over the weekend. Let's jump into these charts. S&P 500 up 1.25%. NASDAQ 100 up 0.79%. Bonds are down. Gold is up a little bit. So how did we end the week on the S&P? We ended it with a red open box candle with a wick on the bottom. Now, that is compared to the several prior weeks, but particularly the 3 prior weeks of lots of up movement. We did hit a higher high during the course of the week, but of course we saw that candle shave off, go from green to red with the plunge that we saw take place on Thursday. Some worrying, some shudders across the market. Again, bringing to people's forefront the fact that there is something called a bull trap. All of this talk about a vertical recovery. Based on what? That's the real question. And again, my friends, let's not overthink it. We don't have to have a reason for why things are doing what they're doing. If you're an engineer and you've got to figure it all out and do the math every time, you are not going to be as successful a trader investor that you could be. Why? Because you're overthinking this. Let the charts lead you. What are the charts telling us? That we've seen a huge slowdown in the up movement, that there is a pushback. We see that the price percent oscillator, which was slamming up, has lost a bunch of energy. Derivative oscillator too. First time in many weeks, derivative oscillator bottomed back on the 27th of March and has been moving up ever since then. Price percent oscillator crossed over the red signal line. That initiated our weekly vertical crossover going up back on the 8th of May. And again, these are alerts. They are just alerts that we see across the board. Look at this latest candle. We had candles going up, started slowing down. We talked about that. We saw it happen on the 2-day candle representing Tuesday the 9th and Wednesday the 10th of June. We saw a slowdown in the up movement. And then the plunge happened on Thursday. It has that wick on the bottom because it moved up some. It backtracked a little bit after a big big plunge on Thursday. We did even press through the weekly trend line. We're still below the 2-day. 2-day price percent oscillator heading down, derivative oscillator, which has been going up since it bottomed out on the 19th of May, started moving up on the 21st and has moved up all the way until the 10th. And then, boom, started losing energy. That, of course, is a triple smooth version, the derivative oscillator, triple smooth version of the relative strength index. Shows you overbought, oversold positions. You've not read the book, you need a copy of it. Follow the link in the show notes. Been sending out a lot of those lately. What do we see in the morning? Slow down we can see the slowdown in the down movement as far as that green candle goes. And then, of course, we have, and again, this is a Heikin Ashi candlestick. Those of you who don't understand, Heikin Ashi candlesticks, great training. In fact, I'll put it at the end of today's video for you. On Heikin Ashi, you need to understand what they tell us about average pace. And again, we look at the 4-hour chart, we can see that the average pace has slowed as far as the price percent oscillator goes. As far as the candles go, we can see that there's still, on that short chart, energy trying to push that down. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. So we shall watch and see how this new week develops. But we definitely have a blow-off of a lot of energy pushing this market up. Is the bull trap being sprung? I did a video for you guys yesterday questioning that, alerting you to the fact that it is out there and that at some point what goes up must come down. And when it comes down, like all markets do, you need to be ready for it. You're going to be seeing in the future, sometime, these solid red strong down moves. If you think we've gone through all this and we're just going to go into solid recovery after recovery after recovery, it's just going to keep going up, 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 up. My friends, that's not the way the world works. The government can pump money in, but at some point, you've got to have velocity of money. You've got to have money going through the economy, and that happens with productivity. We've not had a lot of productivity. I won't be getting into big economic lessons, but you have been warned, and we shall see. Now, we go from SPY to QQQ, and look at that. We still have a green up candle. It was up 0.79%, green up candle for the week. NASDAQ 100 keeps climbing. We saw it lose a whole lot from that candlestick, and we did reach a higher high during the week. Look at how the energy was shaved off the price percent oscillator and the derivative oscillator. We go to the 2-day chart. What do we see there? Again, a red spinning top, indecision tending down just above the 2-day, above the weekly. And again, watch that 2-day chart on both the S&P and the NASDAQ 100 for a potential crossover this next week going down. I know that you want to play this out as long as it will go. Not telling you you have to pull those trades at this point, but you get a crossover going down, penetration of the 2-day trend line, and that's a pretty good one. Those are sufficient warning bells. Now we go to the 4-hour chart, and of course, it crossed over with great power going down in the afternoon on Thursday. And again, we see that the average pace of price movement still down throughout the day on Friday, pushing through that 2-day trend line. Now that's the 4-hour chart. We don't see that penetration on the 2-day chart yet, but again, another warning bell that you note on your daily market worksheet. You keep that in the back of your mind. You learn how to use that going forward as to what happens in the future. That's why we urge you to use the daily market worksheet, weekly market worksheet, and trade worksheets. They are so helpful. They are free. They're in the show notes every single day. By the way, special training. We're starting our 3-part series today. It is Options Made Simple, the Charting Wealth Way. This first training is part 1 of that. It is Options Made Simple, part 1, how options work. You need part 2 and part 3. If you're not a subscriber, you're not going to get this. You need to go subscribe right now at the website chartingwealth.com. You'll get what you need in order to subscribe. Just put in your name, email address, and you will get parts 1 and 2. We'll also make sure that you receive, parts 2 and 3 will also make sure you receive part 1. It's part 3 in particular that you need the most. That's what pulls it all together. I think it's the best training out there. So do a lot of the students. It's free. It's what you need to know, the down and dirty on how options work and how to practice trade them. Now, we're going to leave the stocks, both the S&P 500 and the NASDAQ 100. We're going to go to bonds. Bonds going back the way they should, down, but look at how the week ended. Green, solid green, not an open box candle showing strong up movement, but a solid green spinning top shows you indecision tending up. Again, not really strong up because that is not an open box, but a solid green candle, but is showing you a slowdown in the down movement. Price percent oscillator's lost some of its downward luster. Derivative oscillator, nonetheless, is still going down. Again, price resumed its downward trend on TLT today. Now we go and we look at what's happened over the last 4 days, Tuesday, Wednesday, and Thursday, Friday. We can see that price blew through the 2-day trend line right up there to the weekly trend line. The price percent oscillator still negative, less than flat, actually heading up. Derivative oscillator still negative, but losing downward momentum. So again, a lot of change there in price when it comes to TLT. Even though it was down for the day about 1%, still is, you can tell, where it bottomed. It bottomed all the way back on Friday the 5th, and all it did over the course of this past week was pop up all the way until Thursday and then sliding sideways and down on Friday, right there on that weekly trend line. So again, keep your eye on the prize. If you've already taken your profits in TLT when it was much lower, that is fine. If you're still holding on, be very careful and cognizant of what is going on with this 2-day chart. Penetrations of the 2-day trend line on the 2-day chart's a big deal. Sitting right there on the weekly, a penetration of that typically is going to happen with that crossing over going up, which of course would be your last reasonable chance to pull that practice trade. So again, we'll watch and see. It's nice to see that things reverted back to the norm on Friday. Typically they do. Even as things start to crash and move down, there's some shudderings that take place first. Not saying the bull trap's being sprung, but that it will be sprung in the future. Now, what about gold? Interesting one. We had that weekly vertical crossover. It was a weak one last week. What have we seen happen? We have a green spinning top. Now, if we look back, you guys remember the spinning top that we had on? Do you guys remember this? When we had the weekly vertical crossover back on the 8th, I'm just moving the crossover out of the way. I don't want to confuse you. What do we have happen the next week? Now we had a green up candle with a wick on top that week of the crossover. The next week we had, again, one of those confusing weeks where we had a green spinning top. Lots of indecision, but tending up. We saw that we saw the price percent oscillator really pulled away quite decently from the red signal line. Gave us some worries with the volatility, but then inexorably, what happened? That wave initiating the crossover was strong enough, even though it started off a little shaky, that it, of course, proceeded on for 3 weeks to move up substantially. So what are we looking at here in gold? Well, I hope, and again, hope springs eternal, doesn't it? But we can see that the price percent oscillator is just barely pulling away from the red signal line. We have a green spinning top, indecision. Now again, it's not an open box, it's a solid. So again, it is tending up, but it's showing a slowdown in the down movement. We shall watch, we shall see. We're not going to try to make something out of it that it's not. Look at that 2-day chart. Again, it was moving up. Now it's sort of flat to moving down. Derivative oscillator losing downward momentum. We do see that things have pegged out at about the same area. And remember, we've talked about where gold has been moving between 64 and 58, something like that. So it's been range bound for a while. So what are we looking for? What are we looking at here? We're waiting to see how this shakes out. 2-day chart still negative. Weekly chart is barely negative. So we shall watch. We shall see how this shakes out. We look at the 4-hour chart. It reached its high on Thursday morning, and then has slid sideways since then. The price percent oscillator is losing some of that momentum. So is the derivative oscillator. So we'll wait and see. If you see gold punch through that $64 mark and start trudging up higher and higher and higher, then of course it's broken its range and it may continue to move. So this is a good time for those of you who have entered that trade in gold to be very, very cognizant and learn from what you are seeing. It's why it's so important to fill out your trade worksheets. If you fill out those trade worksheets every day, noting why you got out, did you hit your profit bands? Did you hit your loss bands? What are you doing? Why are you staying in? Why are you getting out? What is it you're thinking? You write those things down, they stick with you. You put that in your trader's almanac, and now you've got something you can rely back on. You have experience. That's what this is all about. Okay, those are our 4 big charts. If that's all you're interested in, my friends, God bless you. Thanks so much. If you want information about the Accelerated Market Mastery course, I've been interviewing students the last 3 days or so. That is filling up. When it is full, no one else will be accepted into it. Everyone does have to be interviewed. I personally interview every student to see if it is what is best for them to start that kind of training right now. It is 3 parts over 3 months: charting, options, and designing your virtual personal wealth fund so that you can practice trade that, learn what you need to learn there. It'll be lots of fun. It's followed by 3 more months of Q&A to make sure that the lessons sunk in, and it's all about everything that we think you need to know to learn the Charting Wealth way, both in options, both in charting, and how to put this personal wealth fund together so you can practice trade that. We want to bring it all together in one, and that's really what we work toward, is that virtual personal wealth fund. So it's a lot of fun. I look forward to getting that going here in the next few weeks. And if you're interested, reach out to us, cw@chartingwealth.com. We'll help figure out if it's a good fit for you. Okay, let's move into Bitcoin. Down about 1.5% for the day. Well, 1.58% to be exact. Now, we had that crossover, of course, in Bitcoin going up. It popped up. And then what it's been doing is just sort of sliding sideways, trying to trend up. But again, price percent oscillators lost some energy this week. Derivative oscillator lost energy for the first time in a few weeks. So again, we go from that weekly to the 2-day, and check it out. It's now officially at the end of this latest 2-day candle, crossed over, going down. Now, if it's a big up day on Monday, it may very well pull back through that, but what we've seen is a sideways slide. Again, Bitcoin being range bound somewhere around the 97, 87 mark, somewhere on a bottom of $8,900. So if it, of course, pushes hard through that $8,900 mark, probably going to keep going down. If it bounces off, might give you an opportunity, because that's what we call a recross. If it bounces off, pulls back through and bounces off the red signal line this next week, might give you an opportunity to jump into a Bitcoin practice trade. Of course, we have seen the 4-hour chart crossover going down back on Monday the 8th in the afternoon. It really just slid sideways for a while. Where the real plunge started was in the afternoon on Thursday, and then through the day on Friday, down 1.58%. So that's where Bitcoin is. Takeaway, watch that 2-day chart over the course of this next week. What about real estate? Real estate rebounded 3.58%. Remember, we had that weekly vertical crossover back on the week ending the 29th. Had a great week the following week, ending, that was the 29th of May. Great week ending the 5th of June. This week, and again, the high on that week, the 5th of June, was 76.07. High this week, I'm sorry, not 70, 86.07. My dyslexia kicking in there. 86.80, so we did reach a bit of a higher high. We do see that the price percent oscillator lost some momentum, but that derivative oscillator continued to gain momentum. We go to the 2-day chart, and we see where the price percent oscillator's gone flat, derivative oscillators lost momentum. Look at that red down candle. The first one you've seen till all the way back mid-month of May. We had a bit of a warning with that red open box candle, a slowdown in the up movement, and now this 2-day right pushing through the 50-period moving average line, which of course rotated over, pushing through the 200-period moving average line a while back. So keep watching, see if real estate continues that trend downward or if it gains some energy over the course of this next week. 4-hour chart, we saw that crossover going down back on the morning of the 10th and really down hard on Thursday, and really nothing but a sideways slide for the most part as far as our Heikin Ashi candlesticks go. Derivative oscillator still negative, lost a little bit of downward momentum, but that price percent oscillator heading down. And again, I will put the training on the Heikin Ashi candlesticks at the end of the video today. Lastly, what about oil? Up a little bit, 0.27%. That's not 2.7%, that's 0.27, so a little over 0.25%. How did we end the week? With a very weak green up candle, hasn't crossed over. Now again, if oil had continued its meteoric rise that it was showing before, we'll see where that ended. Might have crossed over, hasn't happened yet. Waiting for oil to do something. We look at that 2-day chart and you can see where we ended the week with a red, solid red down candle. Derivative oscillator had been flat and over the last 4 days lost energy. Price percent oscillator about the same, lost a little bit of energy, but still heading up. Go to the 4-hour chart, and of course it crossed over going down back on the morning of the 10th. That was Wednesday. Popped up a little Wednesday afternoon and then hammered down on Thursday. And we can see, again, that inherent weakness there. So that is where we are, friends, as we close out this week. Excitement on Thursday, a little bit of recovery to the norm on Friday, but the warning shots have been fired across the bow. Thank you so much. It's great to be with you every day, and we've got so much more to give you. Tune in every day, 10 to 15 minutes. That's all we ask. God bless. All the best from the whole team at Charting Wealth World Headquarters.